Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points.
In this video, I will be speaking about BTCUSD. Now, as usual, first I will be covering the technical aspect for this market, then we will be moving to some analysis of the on-chain data. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, the first thing that I want to speak about is essentially the cycles of this market. In fact, what we had here was the previous halving around this level. Then the market entered into the bull market. Then we had the bear market, which ended exactly on the test of the previous cycle high. So from which the previous bear market had started. And now the market has entered into another bull market, exactly as you would usually expect in a situation like this when a market retraces all the way to the previous cycle high. So far the market has been behaving exactly as you would usually expect in a situation like this. At the moment, we can see that the market is testing exactly the previous high. From here, in fact, we had the previous rejection to the downside, so this one here and also this one here. Now the market has broken above this zone, so this previous resistance from a technical perspective is now turned support. We can also notice that if we're looking at the pattern of this market, since we have an impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 Fibonacci retracement lining up exactly with this previous resistance turn support, therefore creating confluence of support inside of this area, which again, since it is a confluence of support zone, there is an increased probability of getting a potential rejection to the upside away from this area. It is also important to keep in mind that we just had yet another halving event inside of here just a few months ago, and we will go and see that also by confronting it with the on-chain data. For now, let's keep this in mind and go down on the weekly time frame. Now, from a weekly standpoint, we can notice that clearly we have a market which is currently stuck in this range. We have the bottom of the range here, we have the top of the range here. The market already has been moving sideways in this range for quite some time, actually a few months. And until the market will remain in between these two levels, we could simply expect more horizontal price action to be printed. Only a break above this range would become interesting because at that point, we would be in full price discovery with no real immediate resistance levels, if not the psychological resistance levels that the market could encounter. The first strong psychological resistance level would be at the 100k zone, but until the 100k, there is no real resistance if we're looking at the left, because this is essentially a new all-time high, so there is no immediate resistance. Let's keep this in mind and drop down on the daily time frame. Now, from a daily perspective, it is clear that we are still in between these two levels, and it seems like this market is currently pushing to the downside a bit. Now, if the market will manage to break below this level, we would essentially have the creation of a bullish pattern, because a push lower would create this daily M pattern. And as I explained many times, after the creation of an M pattern, there's a good probability of seeing a potential rejection to the upside, completing the M pattern at the neckline. This is a pattern that we see very often in the market, and most of the times the market reacts to this pattern, and there is a completion of the pattern itself. The nearest one that I can see is this one here, where we had this M pattern here. In fact, the market followed with a push higher for the completion of the pattern at the neckline. Now, sometimes the neckline then acts as resistance, sometimes it gets broken to the upside. So this could also be a potential catalyst for a start of a push to the upside, break above the neckline, and then continuation to the upside, break above also the range, and being in full price discovery. That is definitely a possibility. Now, let's keep this in mind, and before we dig deeper into what we have here from a technical perspective, let's first go and confront some on-chain data. So the first metric that I want to look at is the exchange reserves. Now, what we see here, this is essentially the purple line. The purple line is showing the exchange reserves. So simply put, this is the amount of Bitcoins currently present on exchanges. And you can notice a quite important thing, that during the push to the upside, if we zoom out here on the data, and we look at the last cycle, we can see that during the bear market, the amount of Bitcoins on exchanges was falling. So the white line is the price, it was falling. The purple line, amount of Bitcoins on exchanges, was falling as well. However, when the price then started recovering, at first, the amount of Bitcoins on exchanges started following the price, which is what you would usually expect. And they were essentially getting raised as well together with the price. However, then the amount of Bitcoins on exchanges, so the purple line, started falling even more aggressively as the price was increasing. Now, what this shows is that buyers are buying even more aggressively at these levels and essentially moving their Bitcoins away from exchanges. Now, why is this important? Because this increases friction, because those Bitcoins that are not even present on exchanges have more friction if they want to be sold into the open market. So this decreases the likelihood that those Bitcoins will be sold onto the open market, therefore decreasing, or better said, increasing the illiquidity of the market. Speaking about illiquidity and supply in general, we can go and check out the on-chain data that we have for the supply, more precisely the new supply. And what we can check here is that, as usual, the white price, the white line is the price, and the purple line is the amount of Bitcoins on exchanges. Now, what you can see is that essentially every 4 years, around 4 years, you see a cutting in half of this purple line. It essentially gets cut in half. Those are the halvings, in which the amount of new supply emitted into circulation gets cut in half, and it gets emitted into circulation in the form of rewards, essentially, to miners. And what we can see here is that we just had yet another cutting in half, so another halving. And we had it around here, which is essentially around this area here. I don't remember the exact date, but it is around here. You can see it's essentially here's where we had it. So around this area here. Now, in a situation like this, where you have even half the new supply getting emitted into circulation, that decreases, or again, better said, increases the illiquidity of this market. Because if demand remains the same, or even if demand increases at that point, price should increase to accommodate for the new demand. So all of this just to say that the fundamentals at the moment, the fundamental analysis is showing that the fundamentals are quite strong at the moment for a Bitcoin. So moving back to the technical aspect of the market, if we get this push to the downside, that essentially would create an M pattern, which could be a first catalyst, being a bullish pattern, for a potential rejection to the upside. So if we will see this push lower, in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the on-chain data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside. First, completing this M pattern at the neckline, and then potentially also continuing higher. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire all-inclusive mentorship program. This is the most complete all-inclusive mentorship program. You will see here a complete presentation of everything included, which is essentially all my courses, including the programming course on automated algorithmic trading. You also have the possibility to gain access to one-on-one private mentoring, all included in the mentorship program, the trading station software with the Telegram signals notification, and also the COT data software, which is essentially the one that we just used in this analysis. So everything all for lifetime access. And if you continue to scroll down, you will see that you will have the possibility after the testimonials to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest at least to go and check it out at transparentfxtrading.com. You find the link also in the description, and I will see you in it.
If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I'll see you in my next breakdown.